What's up, Effortless investors, and welcome back to the channel where we keep investing chill, transparent, and hopefully effortless. Today we're diving into a question that a lot of new UK investors have. What are the best UK stocks for beginners with small budgets? If you've only got a few quid to invest each month, maybe the cost of a cheeky Greg's lunch, don't worry, as you're not alone. And yes, you can still build an investment portfolio on a minimum budget. In this video, I'm going to explore how, with a mix of low-cost ETFs and steady, dependable UK stocks, that I found when beginning my investment journey 11 months ago. As always, the time codes are in the video description if you want to skip to any stocks or ETFs in particular, but if you want to follow along for the full ride, pop the kettle on, brew yourself a cuppa, and let's get into it. First up are ETFs, or exchange-traded funds, which are basically bundles of different stocks in one tidy package. Think of it like ordering a mixed grill. You're not just getting sausage, you're getting steak, chicken, and maybe a bonus onion ring. More variety, less risk. And now I'm realizing that I should have eaten before recording this video. Moving swiftly along, here are two low-cost ETFs I looked at as a small budget and new investor. Starting with the Vanguard FTSE All World ETF, ticker symbol VWRP or VWRL. Okay, technically it's global, so not just the UK, but it's perfect for investors like me. It gives you exposure to over 3,500 companies around the world in one investment. It's like buying a slice of the world economy for just over £100. As you can see here, its current price is just over £108. Aside from the global diversification it gives you, it also pays out a dividend. Now the dividend isn't massive, it's only around 1%, which isn't massive, but it is still a nice little bonus. You may have noticed that I gave two different ticker symbols at the beginning. That's because the fund comes in two different flavors. VWRP, which is the accumulation fund, and VWRL, which is the distributing fund. The difference is that VWRP automatically reinvests the dividends into the fund, whereas VWRL pays them out to you. I personally like the distributing fund, as I find as a new investor it gives me a nice dopamine hit when the dividend pays out, which helps keep me motivated. Looking at the growth of the VWR fund, VWRP will pretty much be the same. We can see that it has a total 5-year return of 67%, which gives you an average of 13.4% per year. If we take a broader view, we can see that the fund is a little over 13 years old and in that time has a total growth of 336%, which would give an average yearly growth of 25.8%, which is fantastic. Now that's not a measure of future performance by any means, but does give us some useful information as there have been a couple of market corrections during that 13-year span. Now I do invest in this fund and it very much acts as my set it and forget it investment. And I intend to keep investing into this fund month on month. Ultimately, I like the global diversification it gives me. I like the historical and potential growth. And I like the dividend. Is it a little bit boring? Probably. Do I care? No. Moving on to the next ETF, which is the iShares Core FTSE 100 ETF, ticker symbol ISF. Now, this one is UK focused. It tracks the top 100 FTSE companies listed in the UK. You've got big names like Unilever, AstraZeneca, and HSBC. It's like the who's who of British business. It's a cheap fund at only 0.07% per year, and it also pays a nice dividend of 3.38%. That dividend is paid out quarterly, so you're going to get a payout every 3 months, which is lovely if you like getting paid to hold on to your investments. If we take a look at the growth of the fund, we can see that over 5 years it has given a total return of 63%, giving an average return per year of 12.68%. It's a fund that has been around for 25 years and has an average return in that time span of 9.16%, which is not dissimilar to that of the S&P 500 in the same span. The best bit about ETFs, and the reason I started with them, is because they give you instant diversification. There is a lot of information to sift through when you first open an investment account, and selecting a stock to invest in can feel overwhelming. ETFs can get you invested straight away, whilst you learn more about the stock market. As always though, be sure to do your own research before investing in any ETFs, as any investment carries its own risk. Next up, I want to touch on some individual stocks. Now, I'm not saying you should bet it all on one company, but if you're curious about stock picking, here are a few stocks that I looked at and think are reliable options. Starting with Natwest, ticker symbol NWG, which is one of the high street banks here in the UK. Now, it's not the cheapest of the 4 high street bank stocks. In fact, I think it's the second most expensive high street bank stock. I'll pop a comparison of the 4 high street bank stocks on the screen whilst I ramble on. As you can see, Natwest has shown some fantastic growth over the last 5 years, growing more than 100% more than the second highest high street bank stock. In total, it has grown 256% in the last 5 years, indicating strong capital growth potential. It has a nice 4.8% dividend that pays out in 2 installments per year. Now, I know what you're thinking, bank stocks aren't necessarily the flashiest. It's not going to wow your friends when you tell them. So think of this stock as the plain toast of investing. It's simple and dependable. Next up, we have Legal & General, ticker symbol LGEN. This one's a fan favorite. It has a great dividend yield of 8.34%, strong long-term performance, and it's in a sector that just keeps ticking along. It's like a tortoise in the investing race, slow and steady, but always moving forward. If you are looking for a good income stock, this is a great one to look at. Its dividend is split into 2 payouts throughout the year, and it's a popular stock amongst dividend growth investors. If you're unsure of what Legal & General are, they essentially provide various insurance products and services, not just in the UK, but internationally as well. Now, let's be honest, who doesn't have insurance? Lastly, we have Unilever, ticker symbol ULVR. I'm sure some of you may be wondering what Unilever is. I'd be willing to bet that you've definitely got some Unilever products at home. Dove, Hellmann's, Ben & Jerry's are some of the many products that fall under their banner. This consumer giant has global reach and consistent profits. It's the kind of company that makes money while you sleep, snack, or even shower. Now, there hasn't been a huge amount of growth overall in the last 5 years, but that could be attributed to the stock market downturn in 2022. We can see that it has been steadily recovering since then. Like the previous stocks, Unilever also pays out a dividend, but they pay out their dividend quarterly, so 4 payouts within a calendar year. The dividend yield currently sits at a nice 3.24%, another solid stock option to look at for those just dipping their toes into the investment ocean. As always, make sure whatever investments you make, if any, align with your goals and risk tolerances. So before you go diving off the boat into the stock market ocean, here are a few tips to consider. Start with ETFs, as they give you instant diversification, also known as not putting all your eggs in one Tesco basket. Try to invest regularly. Even £25 a month can snowball over time thanks to compound growth. It's like planting seeds. Be patient. Reinvest your dividends. If a company or ETF pays out a dividend, don't spend it on Freddos. Reinvest it, let your money make more money. And ignore the noise. The market will go up and down, that's normal. Don't overreact if your investment drops by 0.25% in one day. You don't need to panic every time your investment sneezes. So there you have it. A few options to look out for beginner UK investors with small budgets. Whether you're going global with ETFs or starting small with classic UK dividend stocks, hopefully there's something out there for you. Remember, as always, that this is not financial advice. These are just my opinions. It's important to make sure that you do your own research and make sure that the investments you make, if any, align with your goals and risk tolerances. If you found this video helpful, give it a thumbs up, hit subscribe, and let me know in the comments what your first investment was, or what you're thinking of buying next. Until next time, happy investing and keep it effortless.